I'm Sarah Borson-Keto, and in conjunction with NAREIT's REIT Week 2020 Virtual Investor Conference, I'm joined today by video link with Chris Volk, President and CEO of STORE Capital. Chris, welcome.
Sarah, it's good to be here.
Can you talk about STORE's tenant base and how you're evaluating your portfolio in light of the crisis?
STORE is focused on providing capital to profit center investments around the United States, and we have about 500 tenants situated in 49 states. So when the pandemic hit, it was really sector focused. Some sectors were just shut down, and a number of our tenants were unable to be open and have business. And that would include about 75% of that was centered in things like restaurants, movie theaters, early childhood education, home furnishings and furniture stores, fitness clubs, family entertainment centers. Those would be the six areas that count for about 75% of closures that we had. But there were others that you wouldn't even think about, like auto auction facilities, places that were subject to travel, and so on. So we've been dealing with that. And in May and April, we had a shortfall in rents where we deferred rents. In April, that number was 32% of our rents have been deferred and put on notes. May will be a little bit behind that. And the good news is that all these places are now reopening. So a few weeks ago, we had about 35% of our properties closed. Today, it's less than half of that. It's around 15% of our properties closed. And all those have been actually approved to be reopened, which is terrific. So we're hoping that we're gliding through the bottom of this and we'll be coming out the other side. And one of the things about us is that we're not just a landlord, we're almost a financial partner with our tenants. So we're providing a lot of capital for them to expand and to grow. And that puts us in a different framework than many other landlords do. And it keeps us in touch with them in terms of understanding exactly how they're doing. So we're getting corporate financial statements, unit level financial statements to be able to track them as they progress through this. And that's been very helpful for us to be able to really understand where this, where the outcome of this pandemic is going to be for us from a business perspective.
Has STORE adjusted its investment outlook for 2020?
Well, for 2020, when we started this year, our guidance was that we would do about $1.2 billion worth of acquisitions. And of course, we started doing acquisitions in January and February. And then as the pandemic started to take hold, we pivoted pretty quickly in March and discontinued acquisitions. For the first quarter, we did about $265 million worth of transactions, which is a decent number, but we expected to do far more than that. The good news is that recently we raised about $150 million in equity, which we can use to accretively invest in new assets on a selective basis, because as you have moments like this where there's some economic disruption, out of that come really interesting opportunities for our tenants and for ourselves. And so we're looking forward to being there. But that being said, we haven't reiterated guidance or restated guidance, and I expect that the amount of acquisitions for this year will be meaningfully less than we had originally anticipated.
How would you characterize STORE's investor communication strategy during the crisis?
Well, the strategy has evolved. As the crisis started to happen in March, I wrote a letter to our stockholders, and actually I even had it published on Seeking Alpha. After that, we did 2 webcast calls with analysts, and then we did our first quarter earnings call. And on that earnings call, we announced that we would be doing a series of monthly calls to give investors updates, because of course, in times like this where people don't have a lot of visibility to the future, they want to have as much information as they can get. And so we're accommodating that. And I think for us, it's also, or for our investors, I guess, it's interesting to see not only how we're doing, but also what we're doing has to say about the overall economy, since we have so many middle market and larger companies that are participating in this economy and having their facilities being reopened. So we'll have the first earnings call, or the first conference call will be on May 27th. So just prior to the NAREIT event, and then we'll be having one in June and another one in July.
More broadly, do you expect the pandemic to alter demand for real estate across your sector?
Well, in the short term, the pandemic has essentially curtailed growth and really even sort of stopped the economy. So as a result of that, there's been very limited activity from an investment perspective in real estate in general, and certainly in the areas that we're in. On the brokerage side, we don't do a lot of brokerage stuff, but on the brokerage side, we've definitely seen a slowdown. That being said, we will slow down. We will sell off some properties from time to time. We strategically do that and redeploy capital. And there is some market is just small. On the acquisition side, the fact that there is less capital available creates some opportunities. So we're excited about the ability to be able to do that. And I think as we come out of this pandemic, one of the things that I'm optimistic about is I foresee that interest rates are likely to be low for some time. Let's say 1% or less for the 10-year Treasury. That will have very nice things to say about real estate values. I think real estate values will hold up well in that kind of an environment. And of course, companies that can deliver predictable and sustainable cash flows, which we hope to be able to be doing, also that will increase their values materially. So we look forward to that.
Chris, thanks so much for joining me.
Well, Sarah, it was a pleasure. Enjoyed being here. Thanks.
And for more news and information on REITs and listed real estate, be sure to visit NAREIT's website, REIT.com.